Good morning, this is Giuseppe Basile, analyst actually. You can find at the blog fibonaccisolken.com. I also post regularly on Twitter using the @fibstalker nickname. Good morning, today is February the 15th, 2013, and this video is part of my weekly newsletter I'm going to send out on Sunday, February the 17th. And in this video usually I review the dollar index also from a long-term and intermediate term perspective, and then I drill down into the daily chart and the last setup. The reason why I follow the dollar index is that it's very important because it trades opposite side to the euro, and sometimes it can offer hints on what is going to happen to the euro. Also, the dollar index can be a good guide also for the other four major pairs like the Canadian dollar, Australian dollar, Japanese yen, and British pound that trade against US dollar. So this video only goes to my newsletter subscriber. You can subscribe the newsletter for free. You go to my website, and on the left side on the home page you find a picture, and you can click on it and input your data. Usually I'm going to share this video with 10 to 15 days of delay on my blog. So let's start. What you see on the screen is the US dollar index continuous contract aligned to the March 2010 expiration. This contract is traded on the ICE US exchange, and I want to go a little bit on a larger time frame here, and this is still the daily, but I want to show you the resistance we had early in say mid 2012. The reason why we had this reaction here in the 84 area is because we had a short here from the highs in June 2010 to the lows in April 2011. So this is the reason why we have been seeing the recent weakness since July in the dollar that brought the euro up, and actually in November we also saw another move lower, and that's again because there is short participation in the dollar index at these levels in the 81.80 area, and we saw price moving lower. On the other side, we also have to notice that we have participation on the long side on the longer time frame. In fact, if we trace a move from the lows in April 2011 to these highs, we can see that this level, the 79.30 area, acted as a support in beginning of March 2012, and again in May 2012. It never hit targets. The targets were above in this 85.11. It's a little bit difficult to see here, but that was the level that was never hit, and the price came back. The point is that this level of support was again, the 79.30 was again respected in September, and then October, and then again in December last year, and also at the beginning of February. So what we can see here in the dollar is that the dollar is within this short setup in the 81.80, and within this long setup in the 79.30. So as we can see, we saw this initial move higher in October, and then till mid of November, and then again there was a move lower, and all the way halfway back never traded here. So at the moment, what is important is that we have to notice here we have a W for victory pattern here, because we had this 80.65 being violated at the beginning of the year here, and we know that when the support is retested successfully, then there is the possibility for this market to go all the way up into the 81.70 area, which is the resistance area here. So that's where I believe we are headed in this market, the 81.80 area. And in the past few days I've provided support also on the daily chart with the trading plans, also last Wednesday in the midweek update, that could be the place where we are going. So at the moment I want to show you, also check the trading plan in the newsletter. We had this extension measure move higher with support in the 79 in the 80 area here, and this has two targets. The first one is in the 80 area, and the second one will be aligned to this 200-day moving average in the 81.30 area, or just above it. And so the next target, if dollar strength continues as anticipated here, the next target should be in the 80 area here. And this next target also lines up with the setup that we have been trading today, Friday, and that's aligned to the 80.30 level. And as you can see, the first target is aligned to that 80 area. So this adds up and strengthen this couple of these two setups here, because they have the same target. So that's where I want to, that's where we will probably see, I anticipate we will see the dollar index. After that, there are two possibilities. The first one is that we, as I showed you in the first scenario in the trading plan, the first one is that we just retrace to the next measure move higher into the 80.60 area here, and then we continue higher. Otherwise we could just go straight high, and again the first target is 80.80 and the second target is 81.30. That's it for the review of the dollar index for this week. I'm going to share this video in 1 week 10 days on my blog, and you'll find the previous videos if you want to check the setups and also learn from the analysis. You can go to my website, and in the futures page you'll find the previous analysis I did for the dollar index. Thank you very much for your attention. I wish you a very good trading week. This week that is starting. I want to remind you that on Monday the US markets will be closed. That's the President Day, and who knows, maybe they could take the opportunity to sell the US market down and keep buying the dollar index, and then sell the euro as well. We will see, price will tell. Thank you very much for your attention, and have a great evening. Bye bye.